This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. AI stocks could be showing signs of fatigue as the end of the second quarter approaches. The S&P 500 rose a little more than 0.5% in the holiday-shortened week between Friday, June 14th and Friday, June 21st. It was the third consecutive positive week, with more than 70% of the index advancing. However, large technology companies that led the recent surge declined. NVDA was the key chart. The semiconductor company briefly surpassed Microsoft as the world's most valuable company. It entered the week up 166% on the year, powered by strong earnings, and its stock split on June 10th. Prices briefly topped $140 on a split-adjusted basis on Thursday, before dropping under $130. The bearish outside day is a potential reversal pattern. It resembled the price action on March 8th, which was followed by 2 months of sideways movement. Other stocks that recently gained on AI enthusiasm, like Apple and Broadcom, also declined. Economic data was mostly negative. Retail sales missed estimates, and jobless claims continued to show a weaker labor market. Housing numbers like starts and building permits were worse than expected. Other numbers like May's industrial production and S&P Global's composite PMI were more positive, reflecting a potential non-consumer rebound. Positive news on interest rates continued. Federal Reserve Governor Adriana Kugler said on Tuesday that inflation remains too high, but she was encouraged by the overall progress and trajectory. She also saw signs of gradual cooling and continued wage moderation. Kugler added that if the trends continue, it will likely become appropriate to begin easing policy sometime later this year. The Treasury Department also enjoyed healthy demand for 20-year bonds that matched strong auctions the previous week, adding to potential hopes that interest rates will decline. Energy was the leading sector last week, according to TradeStation data. It bounced along with crude oil prices after tensions between Israel and Lebanon spurred worries of broader conflict in the Middle East. Consumer discretionaries and financials also gained. Solar energy stocks, home builders, and chip makers were the worst performers. Some of the big gainers included Gilead Sciences and Accenture. Gilead rallied on positive data associated with a potential HIV treatment. Accenture jumped after issuing results. While earnings and revenue missed estimates, the IT company had fallen sharply before the report. Management also highlighted new orders related to AI. Enphase Energy was the biggest decliner in the S&P 500. The drop was partially triggered by J.P. Morgan, citing weak European demand for solar energy products. Last week's news suggested bullishness is getting more commonplace. Citi and Goldman Sachs separately raised their price targets on the S&P 500 to 5,600. Both cited strong earnings, especially by megacap technology companies like NVIDIA. Evercore ISI also lifted its projection to 6,000. However, Bank of America warned that fund managers have the most bullish positioning since November 2021, based on stock and cash balances. Another survey from the American Association of Individual Investors showed just 22.5% of investors were bearish. That's the lowest since early April, the same time the S&P 500 started a pullback. Those points are potentially contrary indicators suggesting that good news is priced in. And now let's chart the market. While stocks have steadily trended higher, chart watchers may notice at least 2 signals for a potential pause. First, the S&P 500 formed a bearish outside day, similar to NVIDIA on June 20th, meaning it closed in the red after making a higher high and a lower low. Traders may look for selling pressure to increase if the index closes below its low of 55.05 that session. Second, the Relative Strength Index, or RSI, is dipping from an overbought condition. If prices break lower, traders may view the June 13th low of 54.02 as support. Some investors may also notice that SIBO's Volatility Index, or VIX, has remained around 13. Moves higher could be associated with weakness in stocks. Finally, the calendar is relatively quiet through the end of the quarter and July 4th holiday. Speaking of the calendar, this week brings a handful of events that are relatively unimportant. Fed Governor Christopher Waller and San Francisco Fed President Mary Daly speak today. Tomorrow brings earnings from Carnival and FedEx. Lissa Cook and Michelle Bowman, both Fed governors, make public comments as well. New home sales, crude oil inventories, and Micron Technology earnings are on Wednesday. Thursday features initial jobless claims, durable goods orders, and pending home sales. Walgreen, Boots Alliance, and Nike issue results. Friday is the last day of the second quarter. It brings PEC, inflation, the Personal Consumption's Expenditures Price Index. While it's an important inflation report, its impact could be muted by lower than expected consumer and producer price indexes earlier in the month. Richmond Fed President Thomas Barkin also speaks. Thanks for watching. Please visit tradestation.com for more.